Welcome back, all you handsome devils. And ladies, I see you out there. Did you guys, by chance, want to see another dividend video? I have one for you. This time we're going overseas. Pack your bags. We are going to talk about overseas cash flow. That's right, international dividend investing. We are going to look at some of the oldest dividend international ETFs that are available. We have ticker DOL, a product by WisdomTree, and of course, always we typically have an iShares ETF in the mix, ticker IDV. Both of these are international dividends. For those of you that are watching from outside the US, these probably will have some domestic companies for you. But to everyone watching in the US, these are definitely international to us. Of course, we're going to throw these in the ring and we're going to look at yield, total return, expense, holdings, and sectors. So without further ado, let's put on the boxing gloves and let's begin. And just like that, we're in my computer. As you can see here on your screen, we are in the portfolio analytics software. We're going to go ahead and put in DOL, that is the WisdomTree International Large Cap ticker. Of course, just like every comparison, we're throwing $1,000 at it. We're going to go ahead and click over here, compare to a second portfolio, International Dividend IDV, which is again that iShares ETF, $1,000. And just so you guys know, if you're wondering, why did I pick these two among all the other different international dividend ETFs? Because these two had some of the longest historical track records. They both came out 06, 07, right before the major recession. So of course there's other excellent international dividend ETFs out there, such as VYMI by Vanguard. There's a European Dividend Aristocrats ETF. But while all those are great, they only have like 3 or 4 years of track record. So for all intents and purposes of this video, it's more valuable and more powerful to choose ETFs that have a long track record, so we're able to truly compare when we throw these in the analysis. So I've received a few questions like that, and that is why. So as we can see here, both of them have almost the exact same expense ratio, 48 basis points and 49 basis points. They are literally 1/100% difference as far as fees. So we can essentially say they are exactly the same priced for the most part. Although here's a big difference. As you can see here, the yield for the iShares ETF is 6.31%. That is a very, very lofty yield, whereas it's almost half over here in WisdomTree. Those investors out there that are looking for just current income, right? They're not looking to reinvest and compound. They want current passive income. They might want to take a closer look at the iShares, again, just right off the bat at a surface level. And those of us looking to reinvest, depending on the overall performance, may not really care about that high yield, and we might want to go with the WisdomTree. Although, let's dig further. We never want to look at just expense and just yield alone. As we can see, overall, the yellow stands for non-US stocks. We're essentially over 99%, or let's see, 97 essentially percent non-US over here, and essentially almost 100% non-US over here. So sometimes Vanguard will classify certain stocks domestic or international, but for the most part, these are two very, very foreign funds. Let's take a look at the trailing returns. So the 1 year from this period back 1 year, we're down 2.79% on WisdomTree, and we're down almost 4%. That's quite a bit. Down almost 4% trailing 1 year on iShares alone. The 3-year looks much better on both ETFs, 4.88% on the 3-year on iShares, whereas we're just over 5% on WisdomTree. The 5-year, though, is pretty puny, ridiculous. Essentially all of Europe and really overseas, broadly speaking, I know there's certain countries that have done well since 08, but broadly speaking, international has not quite recovered from 2008, or on a much smaller scale, you could say, than the US. They had different quantitative easing, they had different monetary policy, and whether it was better or for worse, that could be an hour-long debate right there. But the fact of the matter is they truly haven't recovered as much as the US, which is why half of my M1 Finance dividend portfolio is overseas, because there's good value out there. And I think there's a lot of potential for growth overseas moving forward as well. The 10-year 5.26, trailing 10-year return is 4.06 on the Wisdom Tree. Let's go down to Equity Style Box. For those of you that have never seen Equity Style Box, all this is it shows us what type of market cap and what type of stock is in these ETFs. So over here in Wisdom Tree, we have mostly large cap value. Although interestingly, here's another big difference besides the yield is the market cap diversification within this one. So this one is a large cap dividend. This one is just a dividend international, right? So there's no restrictions on market cap. So as you can see, it has a very healthy dose of small cap, healthy dose of mid cap, but again, again, the lion's share is in large value. So as we go down here, I believe we can see, yes, so we'll get down to the sectors. So as we can see here, they're fairly balanced. iShares is a little bit more cyclical, so let's take a look and see where they differ. Communication services, about 9.5, about the same there, not a big difference. Energy, a little bit of a difference, 10% over here and about 7.26 there. Industrials, about 10%. Okay, so here's a big difference. Wisdom Tree has more, definitely a heavier allocation in industrials. Tech, 3.11, 3.89, about the same in technology. Okay, basic materials, 5.54, 1.17, pretty good difference there. Consumer cyclical, 10.85, 16.93, fairly big difference there. Financial services, 22, a little heavier than I like to see. Whoa, I was just going to say 22 is a little bit heavier than I like to see in really any one sector. Then we move over to iShares. So basically 39 cents of every dollar that investors place in ticker IDV goes into financial services. Maybe that's why their yield is so high, and I'd be interested to see how that sector performs in a recession. I don't know if I like that. That's a heavy allocation to one specific sector. That's huge. And then real estate, both of them suck at that. Very, very puny real estate holdings, essentially zero among both of them. Consumer defensive, 11.27 on Wisdom, almost half that essentially in iShares, 10.95%, 1.87. Gosh, very interesting there. Utilities, a little light there. See, that's a healthy utility allocation right there, especially for dividends. Very interesting. So as you can see, they definitely have different allocations. Let's take a look at, let's throw up the performance and risk, and let's take a look at the chart. Of course, we're going to view and edit all. So the earliest in common that we can compare, as you can see, is June 11th, 2007. So let's go down here and let's do June 11th, 2007. And let's go ahead and make it where are we at here. So what was it, 9/6 probably? Is the last trading day as of this video. So we're going to go there, and we're going to reinvest all dividends, all capital gains. So this is total return. This is if we were reinvesting everything. And again, both of them came out right before the crash. So like, yeah, as you can see here, look, even with dividend reinvestment, look how poor that performance was. Again, as we talk about international, besides some different economic pockets, broadly speaking, international has not quite recovered from 2008 on any sort of major level. So as we can see down here, the cumulative return, so again, this is overall, is 9.5%, whereas we have 10.34 over here. So about the same, under a percent difference. Average annualized, both of them, that's just completely pitiful. You could make more in a savings account. Again, this is because we're looking at right before the 2008 crash. And again, international did not have the massive bull market like the US has the past decade. So let's scroll down here. Let's look at the alpha, beta, and R squared. So most of the returns have come just because of the index, meaning not because of management. It looks like they both have about the same volatility as the broad markets, and they both have negative alpha all the way across, which is performance up and above the index, so to speak. But let's go down to the holdings. Let's go and see what the holdings look like. Maybe some international viewers will recognize these more than the rest of us. Wow, here's a huge difference. The number of stocks in Wisdom Tree is 880, whereas 98, under 100 in iShares. That's another huge difference. And think of that, 98, so out of, let's just call it 100 stocks for easy math, almost 40 of those 100 stocks are in financial services. Think about that when you think about diversification. Again, look at that, almost 40% there. Let's take a look at the top 10 holdings. Are they down here? Where are we at here? And wow, they gypped us. Vanguard gypped us. Look at this. This is where the holdings should be. So what I'm going to do is actually pull up the fact sheets online. Just one moment, we'll get to that. Okay, so here we are in the top 10 holdings. Love Nestle, by the way. This is the Wisdom Tree, ticker DOL. China Mobile, BP, is that British Petroleum PLC? HSBC, one of the largest banks in the world, also one of the most crooked banks. Roche Holdings, Royal Dutch, Novartis, make a ton of hearing aids. Total, that's petroleum, Toyota, and Scotty Kilmore would like this. British American Tobacco, and remaining portfolio is about 82%. So here we go. Since there's a ton of holdings within this portfolio, you're going to see there's not one holding that makes up more than 2% of the portfolio. Whereas let's go over to the iShares, and okay, so that's similar. We don't have the common bank. Look at that, almost 4% in these top holdings. Azimut Holdings, I think that's actually, financials, okay. Oh, it says right here, financials. Royal Dutch, we know that. Consumer Australia, Nordibank, BE Semiconductor, Netherlands, never heard of that one. JM, Sweden. Wow, okay, so a lot of financials, of course, and again, a little bit heavier, very heavy in some of the tobacco and the Commonwealth Bank of Australia. You know what's interesting is Australia really never got hit by '08 on a massive scale relative to the rest of the world. They've had a pretty strong economy, although it's quite small. They've still had a pretty strong economy the past 25 years, so that's really interesting. With that being said, which ETF would you like? Of course, opening up right before the massive recession and taking that big hit up front, of course, that looks like terrible returns. Although, that brings me to an interesting thought. What if we adjust the performance so we invested in, let's say, '09? So let's go back and let's just take a look at it. Let's go view and edit all, and let's basically take this part out and really see what we're looking at. So let's say June 11th, what if we did it in 2009, the past basically 10 years? And let's check out the performance, and all of this right here will, okay, so here we go. Pretty decent performance. So iShares overall outperforms it by about 1.5%, essentially. Still not amazing returns, but fairly decent. Again, international just hasn't been hot over the past 10 years, really since the recession. So even taking out that major hit, they really haven't been, any sort of home runs, a couple good base hits, and that's about it. So with that being said, let me know your thoughts in the comment section down below. Which one would you choose, ticker DOL or ticker IDV? Maybe a split ticket, 50% in each. What do you think about the heavy financials in IDV, or the 98 stocks in IDV versus the 880 of DOL? With that being said, if you enjoyed this video, let YouTube know by giving me a big fat thumbs up. And of course, if you haven't joined the family yet, what are you doing? Hit that subscribe button. Thank you so much for watching, and we'll see you guys next video.